Joining us right now for his take on the markets is Mike Wilson. He's Chief Investment Officer and Chief U.S. Equity Strategist for Morgan Stanley. And Mike, it's great to see you.
Morning.
Before we talk more broadly, can you just comment on Nvidia, what that means maybe for tech companies writ large?
Yeah, I think this is back to the issue we've been dealing with. Is like what's going to be sanctioned, what's not going to be sanctioned. I mean, the 232, like what's going to be carved out. So this is a step in the right direction for semiconductor companies broadly, I would say. And let's not forget that they took a large write-down for those same chips.
$5.5 billion
correct.
Just a few months ago.
And now apparently they can sell them. So that's going to be a huge positive kick to margins, going forward. And look, one of our big themes this year as we came in was that AI capex was going to slow, decelerate, and then all of that troughed in April. And I think that explains a lot of the sell-off in the first quarter and a lot of the recovery. It doesn't get a lot of attention, though. People are focused on tariffs, they're focused on other things that are going on. But the AI capex cycle has been very important for the overall market direction, first down in the first quarter and then the recovery in the second quarter. And this deal or announcement, I think, is just more fuel to that fire.
What do you think overall? I know that you believe the One Big Beautiful Bill was very positive to have that passed. And I think you are writing off a lot of the worst headlines for tariffs at this point, too.
Well, that's right. I mean, I think we had a lot of bad news in the first quarter. Once again, there were many headwinds to growth. Some of those were policy driven, some of those were not policy driven, and they all seem to sort of bottom in the April period. So the market has moved on from tariffs as the worst is behind us. It doesn't mean that we don't still have bad news or issues in front of us, but it's moving beyond that. And the Big Beautiful Bill did sort of wrap up a lot of the things that are now going to lead to positive things for earnings growth, both in the second half of this year and into next year. So as we said at the beginning of the year, President Trump came in. He's like a new CEO. They kitchen sink things, right? They did all the growth negative things first. And I think the Big Beautiful Bill is part of that positive transition now to really earnings growth more so than economic growth. And I think the market understands this. This is why people are very confused about why is the market up? Why is the market up? Well, earnings revision breadth has turned straight up. And we've been talking about this for 3 months. And the Big Beautiful Bill only supports that view further.
Earnings, we're just starting to hear the first of the banks reporting now. I think earnings growth of 3 or 4% is anticipated overall. You think it's going to be better than that or not?
Yeah, I mean, these companies manage these earnings. So I'm very confident they'll beat by 4 or 5% as typical. And here's the key for earnings. I think the first 2 quarters, we didn't see the impact of tariffs because companies sort of pre-bought a lot of goods. And so we're not seeing the flow through to the cost of goods sold. If there's going to be an earnings risk story, it's probably in the third quarter, but it's back end load. Financials don't have impact from tariffs, right? It's going to be in the consumer goods space. And those companies tend to report in the back half of the earnings season. So I think August is going to be the period where we could have some sort of corrective activity around the earnings. But that's a pause because my view is that earnings are going to reaccelerate in the fourth quarter and into 2026.
Mike, President Trump is... he does things that are unexpected. Some people think that's a benefit with our enemies not knowing what the heck he might do at any time. But one thing that seems consistent is if Jensen Huang goes to him and says, look, Nvidia is going to be severely hurt if we can't do that. Or if Tim Cook goes to him and says, look, if we can't build our iPhones right now in the United States without them costing... He seems to be, you can talk to him, and if it's about business and about companies succeeding, even with tariffs, I think if the big three come and say, look, you're doing this, you got to carve this out for us if we're getting seats from Canada. He seems to err on the side of trying to help businesses. Can we count on that? That would be nice if we could count on that.
Well, I think we've learned that over 2 terms now, right? I mean, then the market is onto this idea that, yeah, it's a negotiating strategy to go way over here, and then there'll be carve-outs, right? And things like rare earth metals, right? It's another one, and the magnets. I mean, that's another one where they're making concessions.
No one really wanted to deprive everyone.
Well, so then the question is, from when it comes to tariffs, what do you think we ultimately get or not?
Less.
And by the way, though, if we all know this, don't our trading partners know this too?
And then they don't negotiate.
They do, but
don't they look and go, this, right?
Yeah, but that's why I think the market is saying that we're going to settle somewhere in the middle. So my view personally has been for a while that this is going to end up looking like a 10% consumption tax, sort of like a VAT. And the idea there is that it'll be shared between exporters, importers, and consumers kind of equally. We can live with that. And that's where I think the market has settled on. Could I be wrong about that conclusion? Sure. Could there be situations where it's a little bit worse, perhaps maybe with Vietnam or some of these other countries, maybe even China? But at the end of the day, if we can collect 10% tax on all imports. That's $400 billion a year. I mean, that's real revenue, right? I think that's the goal here it's a revenue generator. Okay, we can live with this. It's a shared tax across those three constituents, and businesses will figure it out. And I think that's why the market it's not complacent. It's just that's where it's settling.